Hi there everyone, this is the Innovative Traders and welcome to our channel. So in this video guys, I'll be doing a market breakdown on indices, and if I still have more time left on the video, I'll also do one currency pair. So first of all, I would like us to define what are indices. Indices are basically a measurement of the price performance of a group of shares from an exchange. So meaning we're basically referring to pairs that present companies. What I want you to know is that whenever we're trading indices, we make more money whenever we are buying than when we are selling. We make more money when we are buying than when we are selling on indices. The reason being, indices are bullish market since the companies deal with profits and improving their company's performance. So the way we are approaching indices is a bit more different than how we approach currencies. You have to make a few adjustments on this one because of in this indices conditions, we're basically focusing more on bullish momentum than on selling momentum. Since companies don't really do bad for a very long time, they'll only crash maybe for a month or a few weeks, then they'll bounce back. Companies, remember, they're all about improving their performance and quality for supplying purposes, stuff like that. So they're not like currencies. Currencies, yes, you can have longer term sales and longer term buys, but on indices, you cannot have that longer term sales and longer term sales. You only have like longer term buys and medium term sales or short term sales. It doesn't take that much longer to sell, and it usually crashes after maybe a quarter or two. So we want to focus more on buying opportunities than on selling opportunities. So what is it that you need to know whenever you're analyzing? If you want to understand indices better, you must know how to identify what we call a trend, first of all, obviously, and you must know your significant levels, and you must know these patterns, head and shoulders, W and M formation, W and M formation. What else? Okay, wedges also. Yeah, wedges. If you can know these points, that is like, this is a way of like trading Nasdaq in a profitable way. You must know how to identify your trend, because Nasdaq is always dealing with trends almost all the time. And patterns, it respect head and shoulders, W and M formation, and also wedges. You can also call them descending and ascending patterns. Right? If you can know how to analyze using this, if you can look for these things, head and shoulders, M, W formations, and wedges, you can understand Nasdaq better. And you must know how to identify your trend. Basically, Nasdaq is always moving in trend than because it's a bullish market. It's a bullish market. So now let's identify our overall trend on a high time frame, which is obviously an uptrend, as you can check. Even if you can go to a bit, you'll see that the market indices are always buying all the time. They've been buying, they've been bullish ever since they are published. Since on the 17th of August 2015, they've been bullish up until this year. It's a company, it only does bet once. Short-term sell. It doesn't drop that much. Short-term sell. So it only does bet for that short time. So now let's dive into where we are. Oh, another thing that I must give you guys, that whenever using indices, you have to use these time frames. 4 hours, 1 hour, 30 minute alternative, and 15 minutes. The reason being, on a daily you won't get that much information. On the weekly you won't get that much information. You'll start seeing the market and understanding it clearly from the 4 hour time frame, 1 hour, 30 minutes, and 15 minutes. That's why most traders are like day trading NAS100. They only swing NAS100 if it gives them that swing low opportunity. So you must focus on you must start analyzing the standard from the 4 hour, 1 hour. 4 hour, you look for structure, which is the trend. Is in uptrend or downtrend? 1 hour. You look for that are you seeing a counter trend or are you seeing a continuation of the uptrend? Then from 30 minutes and 15 minutes, you can start to cater for significant levels, previous highs and lows. Right? So now, on the daily time frame or on the 4 hour, which is the same. These are the times that we're going to need: 4 hour, 1 hour, 30 minutes, and 15 minutes, because that is where you can see like a lot more clearer. So if you can go to the 4 hour time frame, this is where you start to analyze NAS100. I mean indices. Wait, the equipment in NAS100 indices. If you can check, price is moving in one high, low, high. They break this one, low, high, which is high, 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 low, high, 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 low, high, 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 low, high, 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 low, high, 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 low. It didn't break this high. It came back down, consolidating. Reason being, it wanted to get up enough momentum to actually shoot towards the downside to break this high. This high, it seems a bit wrong because it's a higher high. The only time you can swing NASDAQ, it's when you're catching it on swing points, which are here. These are swing points. This is when you can swing NASDAQ. This is when you can swing in index. Okay, in this case, in the NASDAQ. Because let me give you an example. Let's say you took a buy entry. Let's say you took it somewhere here with a tight stop, obviously. A tight stop. Then you were swinging it. You only, after price and passed away, you just move to break even. Understanding that NASDAQ and other indices are bullish markets, you would have held this for like for a period of since from the 5th of March 2021 up until now, which is about March, close to 5 or 6 months, something like that. 5 or 6 months. You would have made this much. You would have made like 11%, which is a lot for indices. It's very a lot. It's a very lot. It's a lot. 34,000 points. It's a very lot. So with NASDAQ, if you want to swing, trade it, you have to focus on swing points from the high time frame, because obviously NASDAQ is a bullish market. It's a bullish market, so you make more money whenever you're buying than when you're selling. But most traders, we are day trading NAS100. We're day trading NAS100. We only swing whenever we get these opportunities. When we get swing lows. Remember, I said you'll be focusing more on double bottoms, head and shoulders, and wedges. If you can check this nature, this is a double bottom, for example. It's a double bottom. This is a head and shoulders. It's double bottom. So basically, when price double bottom again, when price reaches double top information, when price reaches this is a head and shoulders. When price reaches this is a wedge. When price reaches a swing point, it will give you that reversal point, that reversal pattern, which is a double bottom or a double top. That is when you can know that, okay, now this pattern is something that I know. Let me start capitalizing. Let me start looking for entries on it. Double bottoms, double tops, and head and shoulders. They are the most profitable patterns when it comes to 100 USD. So now, on a high time frame, we're having an uptrend, high, low, high, low, high, low, high, low. Now we're anticipating price to break this high here, this high. It is a key significant level because of it is our highest high, We are anticipating price to break this high. Since you're from what a higher low, we can mark our high low also. So these are key significant levels. Let us dive into our time frame to see what is happening currently. Let us take a look at how price approached our major trend line. It came in a counter bearish momentum, a counter to the trend, which is a correction phase. Counter to the trend. Okay, let's clone this. A counter to the trend. This is how NASDAQ moves. Almost all the time. Moves like that. Whenever you want to swing NASDAQ, you have to focus on swing points. This is the counter trend. Let's go to the 4 hour time frame again to identify, for me to repeat what I'm saying. If you can check, it's impulse up, correction, impulse up, correction, impulse, correction. impulse correction, impulse correction, impulse, huge correction, severe correction for what to give us another impulse. So Nasdaq moves like that. It's a bullish market. Most of the time I wait for buying opportunities because of I know for sure that they are less riskier and more profitable than selling opportunities. So now we're coming from what? From a counter trend towards the upside. Let us identify this trend, how it was moving, in order for us to understand what is that we're looking for for further steps. So now let's take a look at this. From where it initialized, from here, it gave us a low, it went up. Let me shift this. It went up, gave us a high, a low here. Okay, it didn't break this one. Gave us a low, gave us a high, came back down. It gave us a low, which is a lower low. Gave us a lower high. It gave us a lower low from this point. A lower high, a lower low, a lower high at this point. At this point. Let me come back to this point. Let me come to this point here. As I was saying, at this point it gave us a lower high. Then instead of breaking this low, it gave us a double bottom. That's why price, whenever we're seeing a double bottom, that's a reversal sign that price no longer continuing with this trend, is not changing the trend. Hence price starting to shift up in this way. Gave us a high low. Now we are anticipating what? A higher high, since price has broken our previous high. And if you can check how price approached our high time frame structure, this level, this trend line, it came in a pattern that is called the wedge. As I was saying, you must know your wedges, you must know your head and shoulders and stuff like that, double bottom, double tops, and you can combine it. If you can check our price approaches, it came in this manner, in this level, in a wedge formation, but this one it's a bit of an expanding descending, combined with a double bottom, giving you extra confirmation that this is actually a perfect reversal for you to start looking for what? Buying opportunities up until to the upside. That is why price started moving up and breaking our previous this is our previous lower high from this trend. Because from this was our lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Then we failed to break this low, but we broke this one, indicating that trend is changing since we've formed a double bottom. Now price wants to give us new higher highs and higher lows. Let me make a drawing here. Price was going down in this manner. A lower high, lower low, lower high. Gave us a lower low, then gave us a lower high. So instead of breaking this low, it didn't break it. It gave us a double bottom. That is when we open our eyes and say, okay, now price is struggling to break this level. What are we seeing now? Okay, I'm anticipating a potential reversal from a downtrend to actually giving us what? An uptrend. Okay, so now it has given us a double bottom. How do you confirm that this it's a break? It's a reversal point. You'll see price breaking or violating this previous lower high. It will break it, make a new high. It will come back down. It will come back down, give us what? A new low. Then start to give us a higher high, lower low, higher high, lower low, higher high. This is how you see a trend is changing. You'll confirm it by price breaking our previous lower high from a double bottom, from a failure of breaking what? Our previous lower low. That's how you see that. Okay, now price is confirming for me a reversal pattern to actually change a trend from a bearish or a bullish to a bearish or to a bullish. So now Nasdaq moves in trends. It moves in trends. If you can understand that, you'll know how to capitalize on NAS100. We approached indices differently from currencies. They're not the same. They're very different. They're not the same. They're different. Okay, if you can check, price has reversed in this manner. It is now giving us this nature. Okay, let us take this one to the upside. It is giving us this nature. Let's get rid of our old data. Let's get rid of our old data so we can get to see price clearly. So now it is giving us this nature. Okay, let me go for recent touches. It's giving us this nature. If you can check, based on currency approach, this is basically an ascending type of channel. It's an ascending type of, but because of these are indices, this is basically an uptrend. It's basically an uptrend. From here, double bottom, a high, a low, a higher high, a higher low. We didn't break this one. A higher low. This is what? A higher high, because we broke this low. What are we anticipating? A lower high. So we are going to wait for price to come to this area in order for you to start entering those buys with confidence. We are going to wait for price to come back to this area so that you can start to take what we call buying opportunities from there. So what is it that you must wait for is this nature. It's impulse correction. You must see some sort of a reversal wedge on this level here, maybe adding confluence with that double bottom, then break of highs, then pushing towards the upside. So now what you can do is wait for NAS100 to come to these areas. If you're still at a beginner level, wait for NAS100 to come to this area so that you can catch buying opportunities. Reason being, there are high chance that NAS100 from this point. Okay, let me go to high time frame so that I can tell you why are we anticipating a higher low. So if you can check, price gave us a high, a low, a higher high, a higher low, a higher high. Obviously we are anticipating what? A higher low before we can form a new higher high. And what is adding more confidence to that is that price is changing from this trend. And obviously I'm pretty much sure that there are most people who are going to catch this trade from here. They're going to catch it from here. It can play out, but then there are high chances of it not playing out. Reason being, looking at the nature of how it broke this structure here, it's actually respecting this mini trend inside it, this bullish trend, which is in the form of an ascending type of channel. So this is the first touch, second touch, third touch to actually drop before going to the upside and giving us those potential buys. Or it can just from here drop up until this portion to give us a solid double bottom before it can actually go up. That is if price fails to have that stronger momentum to go to the upside, and that is if that specific company is doing bad for that maybe specific week or month. So now reason why people will want to buy it, let's remove this one. Let me show you why. They will see this as a breakout and a retest. A breakout, this one, a break of a trend and a retest. And if you can check now, people are already buying it. I'm pretty much sure they'll enter somewhere here, their stop loss somewhere here. But then if you can check it in nature wise, you'll understand that this is basically respecting this. We are focusing on the recent price action. What is price doing at the current moment? And we don't just chase price. Let me get that as well. We don't chase price. We actually take the message from what is happening currently, removing this, putting this back, or reining it back. If you can check, price is respecting this trend. So from this point, they're expecting to take selling opportunities up until this position. So another thing, if you can check, it is giving us this nature of an ascending type of pattern. At the last piece of price. Reason I'm not going on the 15 minutes time is that whenever we go on the 15 minutes time frame, in 30 minutes we're actually looking for entry opportunities. Here I'm just giving you analysis and an idea of what I see on NAS100 USD. Not how can I put it? Not something like, it's not like I'm saying that you must go and do this. Now, what I'm basically doing is that I'm showing you how I'm seeing the markets, and I'm giving you an idea of what I see, so that if you can analyze it, maybe you can just compare it with mine or yours. And if they differ, you might as well learn something from it. Remember, we learn every day when it comes to forex trading. So when I'm giving you something like this, if you're having a setup like mine, you'll basically wait for that extra confirmation to give you that entry type formation. So this is basically an idea of how I see the market, and to help you give you that that understanding. Obviously, if like trading my style, or if you are still need that clarity in the markets, this is not a signal. And I get it right, it's not a signal. So now price is in this form. Let's put this back. So you basically can see price giving us a dead touch from this area going down. If you are at an advanced level, you can take a sell opportunity, but then you must know that based on how I have back tested selling opportunities on Nasdaq, they never really complete their setup. They like they go halfway. They don't really like hit your target basically. So you can take it at the break of this pattern. The first target being the trend line, which is 2% overall, maybe somewhere here. That's if price creates that potential of dropping based on the performance of that company. You understand? Of that company. So if you're at a beginner level, you can wait for price to come to this area to present to you more evidence that this is actually a sensitive area, by the way. First touch, second touch, third touch. This is an uptrend. If it comes to this area in this nature, giving you that descending or double bottom, remember, or a head and shoulders. Those are the things that you must look at when you're seeing Nasdaq, or a head and shoulders. Then you can start taking buying opportunities. You can just wait for Nasdaq to come to these areas to give you that buying opportunities, the buying opportunity entry. Because like let us make this practical. If you can check here, it gave us a double bottom, a double bottom, a double bottom. It is giving us this ascending. This can act as a head and shoulders before it can drop. Or like if you can just note down that NAS100 most of the time it gives that wedges, head and shoulders, M formations, and W formations most of the time. That is where you can make money. That is where you can make money most of the time. Because NAS100 doesn't really respect pure price action. Since it's a bullish market, you focus more on trends than on pure price action. So now this is what we're actually expecting for now for NAS100. We're expecting selling opportunities, selling because of like we're actually commonsensically still containing this trend, in this trend. So price can just respect this trend, continue going down, then push up. So now what is that you're looking for? Nasdaq, you're looking for selling opportunities from this area. Don't get tricked by any impulse move to the upside. If price decides to break, which is possible, the possible part, if price decides to break from here, push up impulsively, at least wait for that extra confirmation, that solid confirmation that will give you that a buying entry to take it to the upside. Don't just jump into a moving trend because of it might push up and retrace. If you know how Nasdaq moves, it might push up, retrace back, give you continuation, come back here, and start shooting up. So what you can do is wait for that right entry. You start looking for buying opportunities. I really encourage buying opportunities more on Nasdaq because of like that is where you can make money than on selling opportunities. Sales are very short. They are very short. They are for intra day trading. So now just wait for an opportunity around this area. If price can give you this nature, because it looks kind of similar, this nature, if you can give you this nature again, this is basically an uptrend, by the way. On an uptrend you must focus on high lows. On an uptrend, high lows, that's what you want to focus on. You must develop patience with that perspective. So from here to here, we're expecting something like this, of this nature, before you can start to act for NAS100. I'm also going to wait for NAS100 to come to this area before it can shoot up and hold it like this. Because if you can check, comparing a sell opportunity and a buying opportunity, if you're catching a selling opportunity from here, yeah, it's going to give you that a bit of 3% to 4%, but compared to the buying opportunity, you're going to get like 8% with less risk. So I rather wait for buying opportunities than jump into selling opportunity on Nasdaq if you are a beginner. But if you are at an advanced level, you can take selling opportunities from this year, because this is what we're looking at. Currently, we are looking Nasdaq for Nasdaq to come here, because this is our new high on this minimum. I mean, this small bullish trend. After here, you can start price moving in this manner, because that's how Nasdaq moves until it breaks this high, giving us the new all-time high. That implies if the company performs good. But then, since we are from a swing low from the higher time frame, I'm very much convinced that this is a swing low. I'm very much convinced that they're actually going for potential buying opportunities. You only want to capitalize on buying opportunities. We want to get an entry from here. Let's extend this here. We'll only enter when price gets here. Push up, impulse up, to correct to this area. We take a buy, impulse up, correct to this area. We take a buy up until NAS100 breaks this high. And when it gets here, you have to pay attention what is going to happen, because of it can create a nature of a double top, then come back down. But then currently you're looking for what? Buying opportunities from this level. If it decides not to come back to this level, if it breaks to the upside, this is what I'm saying to you. If it breaks, wait for a consolidation, a solid bullish continuation before you can enter. In case reason why I'm saying wait for solid continuation, that I don't want you to be caught in fake outs and like what can I say, manipulation, stuff like that. Wait for a solid confirmation. It will come. Something of this nature. Let me use the bus pattern. Something of this nature here. If you can see something like this here, that is when you can start to look for buying opportunities at the break of that pattern. What you have to do is just pay patience and just look at how price is moving. So for Nasdaq, I think that's it. We're looking for buying opportunities around this area to shoot to the upside. For Nasdaq, we're looking for buying opportunities since we are from a swing low. Remember the first evidence, we are from, okay, it's an uptrend. You take your trading checklist. Secondly, we are from a swing low. We are now anticipating what? A higher high, a new all-time high. We're expecting NAS100 to break this high to give us a new all-time high. Before it can come back down again and continue this bullish momentum. We are from a swing high, now we're at a swing low. So what are you expecting? You're expecting price to move up, and now that has been confirmed by how price is moving from this point. It's giving us our high, high low, higher high. We are now seeing a new formation of what? A higher high, and it's giving us 1, 2, 3 that touch and an ascending type of channel to give us those short-term sells before it can give us our overall bullish momentum. So currently you can take that sell, but if you are advanced, and you can only take it at the break of this pattern, because of that is where everything will be confirmed that NAS100 is going to buy. Or you can just patiently wait for that perfect, let me not say perfect, but that high quality entry, high quality value of area for price to come here. Because if you can look left, it will be giving you like an inverse head and shoulders, if you can give it that anticipating imagination, it will give you that inverted head and shoulders. If we can give that overall buy, that's why I'm saying I also going to wait for buying opportunities for this week. And if you're at a beginner level, at least wait for that perfect entry, that high quality setup entry. Wait for price to do this. If it doesn't do this, it will actually push up. If it pushes up, you wait for something of this nature, a very solid continuation, because of why this is a very solid impulse. You're going to need a period from a solid continuation, so that they cannot catch things like fake outs. Nasdaq has a lot of fake outs, has a lot of drawdowns, has a lot of manipulations. So, and it's very volatile. So if it breaks, wait for something like this. If it doesn't break, wait for something like this. It will give you this. It will be now presenting to us our right shoulder. I really hope I'm making sense. So now we are currently waiting for Nasdaq to come to this area. I'm really not interested in this one. If you're advanced, you can take that selling opportunity. If you are advanced, you can clean your charts on our time frame. Make your charts clean remove this, obviously remove this one here, bring this back, cater for the top part, first touch, second touch, third touch, anticipated third touch, first touch, second touch, third touch. From here you can look for selling opportunities. Your first target has to be on the trend. If it breaks, it has to be here or on this level here before we can shoot to the upside. So remember, overall it's a bullish momentum, so you want to be focusing more on selling opportunities. So your priority is selling opportunities on NAS100 USD. We are looking to go bullish. Wait for price to come to this area. That's better because you won't be losing any money. Wait for price to come to this area for buys. If it gets to this area in this nature, again, you kill it. Don't have mercy on it. So yeah, let us get to US30. Actually, took a look on this one. Let us get to US30. US30, US Wall Street, which is Dow Jones. US30. They're actually quite in the same nature, because like they are that correlated. I can say 80% correlated. Even US30, it's also it represents a company, 30 companies of the US. Because okay, now if you can check the same principle, this is an uptrend. How do you see it? They're seeing it by higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, a high low, this one, a high, it broke this one, a high, it gave us a high low. Even this one, it respects I can say 80% of pure price action, because of like bullish continuations, bearish continuations, selling opportunities. You can like use almost all of that. But then if you're still at the beginner level, focus more on buying opportunities on indices. That's my advice to you. Now from your swing low, we are anticipating what? A new all-time high. A new all-time high. Whenever you want to trade indices, if you want to make money and you want to build consistency out of them, you have to focus on buying opportunities. They are less riskier and they are highly profitable, because the market is bullish. It has been bullish ever since it was published, because of its companies that are dealing with performance. A company won't do bad for the whole year, for the whole 2 months or quarter. No, it won't. It only does that for like how can I put it? Short period of time, then they recover. They're all about improving. So if you can check, we are having this let's go for recent price action. We're having this. This was a high low, we gave a swing low. If you can check, this was a double bottom also. This was a double bottom, then a short up. We're anticipating a new all-time high. And if you can check, price is currently trying to approach our high. This is our highest high. This is our lowest low. So let us dive into the 1 hour time frame to see clearly what is currently happening. Okay, initially you can see all of these things. They're almost like 80% correlated indices. They almost move the same. Because if you can check based on structure, okay, we have this here. This was also a counter bearish trend. Okay, from here, this was also a counter bearish trend, a counter to the trend to give us an impulse to the upside. So now, based on how price was moving initially, from this point, a high, okay, a low, a high, a low gave us a high. It failed to break this low, giving us an M formation. But then we have to wait for what? For confirmation. Price has to break this high in order for us to start looking for buying opportunities, which is what it started doing by giving us this. It broke the high. It broke this high. It broke this high. Now, bullish trend is confirmed. We are starting to look for what? Buying opportunities. But then looking at the nature of how it's moving at the moment, from this, remember, this is our double bottom position, zone, double bottom zone. From here it gave us a low, a high, it ranged low, it gave us a higher high, it gave us a lower low, it failed to break this low. Now it broke this high, giving us what? A new high, which is a higher high. After a high, what do you anticipate? a trend. We're anticipating what? A lower high before our next all-time high. So in an uptrend, in simple words, in an uptrend, focus only on buying opportunities. In a downtrend, focus only on selling opportunities. That's how I can put it in an easy explanation. So now let us cater for this trend that this market is moving in. This is a trend. Don't confuse a trend and a pattern. They are very sometimes they're very much confusing. Don't confuse a pattern and a trend. They're not the same. So if you can check, let's cater for the bottom part. We have first touch here. We have second touch. The current anticipating a third touch. The reason we are looking for in this nature, from this one, we are looking for USD to come back to the downside before we can shoot up. You cannot enter here. This is not a safe area for buying opportunities. This is actually a sell zone. This is a sell zone. If you are advanced, you can take your selling opportunities here, provided that you get if you can check how price approached this level. It approached it in an impulsive manner. You cannot just jump into it and enter let's say a sell here. Okay, let me put that too. Enter a sell here, stop loss above here, then maybe target here. Because of price, it's still impulsive. It didn't give you that a retrace or something like that to actually show you that I'm going to the downside. So you have to wait. If you can enter here, it can just trigger you in. It can take you in, then continue going up, then it can drop, then you start getting emotional. So now, what is it that you have to wait for? At least on the 1 hour or 4 hour time frame, wait for a solid retrace here, then go to the 15 minutes time frame, wait for that consolidation, same around this area, to take it to the downside. If you're at an advanced level, you can take that. You can wait for this and take selling opportunities. But then if you're at the beginner level, you can wait for price to come back here to give you selling opportunities. Because if you can check the nature of the market in this case, of how it approached there, it approached that phase in an impulsive manner. What do we expect after an impulse? Obviously a correction. So if you can get something like this, if you can wait for something like this, when you get here, you can in this manner, if you can get in this manner, that is when you can start looking for selling opportunities. Because here it's a zone, it's an area, how can I put it, where there's less risk. You can wait for price to come to this area before you can take it, or you can take that selling opportunities if you are an inter-trade, over again, a day trader or a scalp trader, up until you obtain your first target, possibly to this low if it can come here. But then again, I doubt it will do that. Indices, according to how I've backtested them, they're always buying, and they don't complete their sell setups most of the time. They only complete the sell setup whenever they're crashing, and they only complete short-term sell setups, not that long-term. So at this position, we are looking at this current moment, and we are looking for what? Selling opportunities up until this level. Selling up until this level before we can start to look for buying opportunities to break our all-time high. Do you understand? So Nasdaq and Dow Jones, which is US30, USD, we are looking for buying opportunities. These indices, guys, they're always buying all the time. It's companies. If you want to make money on indices, you have to focus on buying opportunities more often. Wait for buying opportunities. Wait for them. If you're at an advanced level, that is when you can start buying and selling at the same time. You can look for selling opportunities, you can kill them all, then you can come back and look for buying opportunities. You'll get to that level. Yes, most people do that. But then if you're at a beginner level, focus on buying opportunities so you can build that consistency. You understand? So now, at this current moment, we are looking for what? Don't forget, they're looking for selling opportunities to come to this area, but they're going to be focusing more. We're only interested in this manner because from here, we can swing our buys up until there. Let us do the comparison again. If you can take a sell, if someone can take a sell from here to here, that's like 5%. That's 5%. If I can take a buy, if I can wait for a buy, patiently wait for a buy, coming to take it from here, and go with it up until the way, I'm taking about 9%, which is like a good risk to reward ratio. No matter often how you caught that end, you just have to be patient for that right moment. so that you can take high quality setup trades. So even if you can take a loss on something like this, you won't like it won't affect you emotionally, because of like this is one of the trades that you can take like out of 10 times and still be profitable. You understand? So like this is like, wait for this opportunity. Don't rush into taking it. Wait for this opportunity to come here, then push it to the upside. So for Nasdaq and US30, we're looking for price to first sell to gain momentum, to go and fetch momentum. Some can say to go and fetch those orders that are there to actually give us that overall potential buying bias to the upside. So we'll be looking for buying opportunities when price gets here. When price gets here with the tight stop loss up until to the upside. So patiently wait for it. Probably it will be ready by maybe Wednesday or Tuesday, depending on how price moves. So that's how we're looking for NAS100 in USD and US30. So now let us take a look at a currency pair for the last time. Currency pair, which is Euro USD, I think. Euro USD. Let's take a look at Euro USD. You have to understand that whenever it comes to currencies, you have to be a lot more patient, because of they take a long time to play out. They can consolidate the whole 2 weeks or 1 week before they can go to a direction. So since you know, guys, with currencies, we're keeping it simple. The first thing that you have to understand, direction. The second phase is significant levels. The third phase identification. The last one is pattern identification. You do those on the 4-hour and 10 frame. Remember, I told you that you start on the weekly. You want to identify the bias of the market. If you can check from this point, we made a low, we made a high, lower low, lower high. We didn't break this one. Lower low, lower high. Lower low. This is a lower high. Instead of breaking this one, we created a double bottom, which is a reversal. Now we are starting to look forward buying opportunities. But what can confirm that we want price to break this high in order for us to start looking at potential buying opportunities. As you can see, price is building towards breaking the high. You understand? So breaking of this high will confirm our bullish momentum, since this is basically a bearish trend. This is a bearish trend. Low a high, lower low, lower high, double bottom. So price is stuck between these areas. Let us mark this to make it simple. Stuck between these areas. So now let us dive into the small time frame. The high time frame direction is changing. We're looking for buying opportunities. You take your trading checklist, then you go to your daily, identify your significant levels. We've already marked 2 of them. This one, the lowest low, the highest high. Then we have this one, of the highest high of the current market price, and we have obviously the low here. So now, what is it that we have to do? Go to the 4-hour. To the 4-hour, what is that? Identify our structure, which is our phase identification. If you can check how price was going to the upside, it was in the form of a downward trend, an impulse, correction, strong impulse, a corrective manner, impulse, correction, impulse, then it gives us this structure. It's corrective, so the phase of the market is corrective. I did an analysis on this on the previous weeks, I remember. Hence I'm saying, when it comes to currencies, they take a lot of time to play out, so you have to be more patient. With them. So now let us take a look at the last part of price, which is corrective. We have this structure here. We want to focus on the current market price, recent touches. We have this structure. If you can check, we have a lot of touches here, indicating that this is a sensitive area to actually push to the upside. Now on your USD, we're actually looking for selling opportunities, because of this is actually a reversal pattern. This is a reversal pattern. How can I put it? Let me say a reversal expanding pattern. Expanding pattern. Reversal expanding pattern. This one here. So we are actually anticipating what buying opportunities. The reason being, and if you can go to the higher time frame again, just to give you that extra confluence, we had this consolidation here, impulse, correction, impulse, correction, impulse. Now price giving us this larger correction to give us that a big solid flag to give us that high momentum to break. Whenever you see price giving us these larger structures, they're actually building up that enough momentum to break those strong levels, no strong highs and lows. So this is basically one impulse leg correction to push to the upside. We want to catch that bigger momentum that is going to happen on Euro USD. So we are looking for what buying opportunities. Let us go back to the 4-hour time frame. We are looking for buying opportunities, and if you can check on the bottom part, we have a lot of multi-touch confirmations. And if you can check how price broke this low, these lows here, it broke in a corrective manner, in a structural manner, basically meaning we are catching people on the side of the market, those who are relying on these ray lines and support and resistance, something like that. Those who are relying on them, I'm not saying they don't work, they do work, but then they are there acting as a guide. You don't have to rely on them, they are there as a guide into supporting structure. That's what I'm trying to say. So if you can check price broke, most of us were seeing this selling opportunities, but then we know that according to nature, this is basically one large continuation. This is actually pattern expansion to actually move towards the upside with our bullish momentum. So now with Euro USD, you're looking for buying opportunities. Let us go to 1 hour time frame to check if you can see those entry types presented. Okay, this looks very interesting. If you can check, this is a first touch, second touches, third touches, first touches, away, third touch, away. Third touch. This is the first touch, it went away. Second touch, it went away. Third touch. You only count the touch if price touches a point, it pulls away. Touches a point, pulls away. Don't count these ones. Don't. You only count it if it gives you a touch. It pulls away, pulls back away. Touches, makes a touch, pulls away, makes a touch, and pulls away. So now let us take a look at what this price is currently printing for us. I'm kind of like seeing an inverted head and shoulders coming from a double bottom. At first we have double bottom. Okay, we also have a wedge. Let us run this back. We are basically anticipating a third touch here, but price gave us an override. It gave us double bottom. It shot up. We're actually expecting a third touch here before it can shoot up to give us that picture perfect rising falling wedge. But then the market is imperfect, so we work with what the market gives us. So it gave us a double bottom, it shot out impulsively, and now look at what it's giving us a bullish continuation pattern, which is in the form of like a pennant. If you know a pennant continuation, it is a pennant continuation. So you're basically looking for what? Selling opportunities. We have an entry already of about, let's put it on 35 pips. That's what I like, 35 pips, to be avoid taken out by manipulations and stop loss hunts. 35 pips entry at the break of this pattern. Impulse correction, what do you expect next? An impulse to the upside. That's how the market moves. Natural progression. The nature of the market, go back to the recent videos. Impulse correction, impulse correction. That's how the market moves when it comes to currencies. So we are expecting price to break this level to trigger us, to give us that nice beautiful swing buy towards the upside. If you're a scalp trader, you can take your profit from when it gets to this point. The first take profit from here, second take profit, third. That's, you know how we trade swing traders, but then scalp traders. As swing traders, we know that we are targeting this high for first target, which is about 7%. Then the second profit is to 90% rule is here. The overall is to the high, but we're keeping it simple. We wanted to target from here. And if you can check, remember I said this is a wedge. We are adding confluence now. We want to see points. How many points are supporting our selling opportunities? We have a descending pattern, a reversal descending pattern. We have a wedge, the last part of price. We have a wedge. We have a double bottom within the wedge. We have a descending within the reversal. We have an impulse correction, and we have what we call a head and shoulders pattern. So this is actually all that these are all the points that are giving you that should give you the confidence of taking this trade. So you're actually waiting for the market this week. We'll probably wait for the spreads to cool down tomorrow, then see if we can get analyze on this USD, because like the sitting setup, the setup is ready. We're now waiting to set our orders above this pennant and take it to the upside. Even if you can dive into the 15 minutes time frame. USD 15 minutes time frame. This is the 15 minutes time frame. This is actually a beautiful pennant, and if you can check, we are having first touch, second touch. Sometimes price doesn't come for a third touch. It can just go up like this, come back down, then start to move with us. So you can just shift it a little bit, add like a bit about 5 pips, add 5 pips to it instead of to avoid things like fake outs. So you are waiting for price to give us that reduced risk entry from here. If it can correct in this manner, you can look to catch it from here with about 15 pips stop loss. 15 pips stop loss from here. Stop loss being below this low, protecting it by this low, yeah, which is very nice. So you can like wait for price. You have two entry types: a reduced risk if it breaks impulsively. If it doesn't break, you look for an entry here, a high risk entry at a first touch, second touch, third touch to go up with a minimum stop loss of 15 pips. Don't go less than that. So yeah guys, that's all for this video. I hope you enjoyed and I hope you gained something from it. I really hope to see you on the next video I'll be uploading next week. So that's it for this video. EURUSD, you're looking to buy in opportunities. US100, NAS100, US30, you're looking for those smaller pullbacks. After we will catch those buying opportunities to the upside, we'll swing them to the upside and keep on capitalizing until it gets to those major highs. So that's it for the video. Thank you for tuning in. For those who are new, don't forget to hit the like button and subscribe, and we really appreciate your time of watching this video. I really hope you learned something from it. It's Innovative Traders. We're out.